In this video, I'm going to explain a few key things that I fixed which turned my trading around. So I hope you guys get value from it if you're struggling with trading or you're just starting and want to get some knowledge on how to improve your trading, then keep watching this video. Also, I want to say thank you to everybody that's liked and subscribed recently. We're on the road to 1,000 subscribers still. We're about 600, so crazy. Thank you for the support. If you guys get value from this video and learn something, or you want to help me grow to 1,000, please like and subscribe. I'd appreciate it. And yeah, let's get into the video. So the first major thing that I had to fix was understanding a win and a loss. Like, when you first get into trading, you assume that when you win, it's a good day. If you have a green day and you're positive, and if you have a loss and it's a red day, it's a bad day. And I thought this, and anyone outside of trading who doesn't understand it would say the same. If you went up to anybody in the street or any one of your friends who's not into trading and said, "Oh, I won today, I made profit," they'd go, "Oh, well done, that's well done, what you did well." And vice versa, if you said to them, "I had a losing day today, it's, it is what it is," they go, "Oh, what did you do wrong?" And I used to think like this, and I think a lot of people do think like this, but actually a winning day isn't always a good day, and a losing day isn't always a bad day. If you execute your plan to a T, and you took the trades you should have took, because that's what gives you the edge, that's what gives you the chance of success, because you're executing the trades as you should. If that loses, you have a sequence of losses, again, because probability, you can't win 100% of the time. If you take 2 losses that day, and you end the day negative 2%, you've lost money that day, that should still be a good day to you. A good day is how well did you execute your trading plan, not what was the reward. Because by executing your trading plan efficiently and properly, that's what will give you the positive results in the long term. But you have to stick to that plan short term. And if that means having a losing day or a losing week, you have to look at that as a good day. It's not a bad day necessarily. And same with the winning. If you took a trade that wasn't part of your plan and you won, that doesn't mean it's a good day. Just because you made money and you're up short term, if you keep doing that, you'll probably lose the next sequence of losses because you're gambling. If you took trades and it was part of your plan and you won, again, that's good. But if you took trades and part of your plan and you lost, that's not necessarily a bad thing. If you took trades that were not part of your plan and you won, that isn't a good day just because you won that day, just because you were up. So that was a big distinction I had to realize, because like I said, most people assume if you just make money, it's a good day. If you lose money, it's a bad day. But it's the long term. If you keep doing those processes, the outcome will be positive. So if I keep taking the trades that I know I should take, that are part of my trading plan, that I know if I execute to a T will produce me the returns long term, if that means me taking a few losses that day or a few losses that week, I had a bad week, then there's no issue with that whatsoever. So it's about sticking to your plan. And as soon as I identified that a loss isn't always a bad day and a win isn't always a good day, it's about executing your plan as you should, as you know you should. That was a key thing that helped me fix my trading. Also, another thing is like truly understanding probabilities, because when you hear that someone has a 60% win rate or a 70% win rate or even a 50% win rate, you have to understand that I couldn't get my head around the losses. So sometimes I'd assume if I have a few losses in a row, that means my strategy doesn't work. Or if sometimes I'd take 4 losses in a row and I'd be like, well, this doesn't work. Have I been scammed? Like, you haven't. But the moment I truly understood probability, and that helped with back testing, I went through the data and realized how many losses my strategy can take in a row and still end the year really positive. It was eye-opening, because if you take 3-4 losses in a row, that might tempt you to change things, tweak things, change strategies. And that's what I did a lot of the time. I'd look to change, I'd look to implement new things, I'd look to try and make tweaks because I didn't accept the losses. But the moment I realized I took the trade as I should, it was perfect setup, it just happened to lose, it happened to be the sequence of probabilities that lost. The moment I realized that is the moment I didn't change anything, and I kept executing the trades as I should, which allowed the probability to play out. And that was my problem. You have to understand, even a perfect strategy could take 4 or 5 losses in a row. It's coming up with a plan to get out of the drawdown, to remain psychologically not shaken by that, and to keep executing your plan with limited emotion so that you don't make any rash decisions. And that was so important for me because, like I said, I would take 3-4 losses in a row, and I'd be questioning then the negative self-talk. I'd be sitting there going, does this work? Is this going to continue to lose? So once you understand probabilities and you understand that even the best strategies are going to have 3, 4, 5 losses in a row, or also you can have 3, 4 wins in a row, but the losses are what affects people the most, I would say, or what affected me the most. So it's understanding sequence of probabilities. You can take 3, 4 losses in a row. It's about getting out of that, being strong and focusing, sticking to your plan without deviating from that. Another thing that significantly helped me improve my trading was focusing on higher probability setups. So I used to trade a lot of currency pairs that made like 20 currency pairs. And what that meant was every time my strategy or every time there was an opportunity, I would take trades because I didn't want to miss trades when my strategy was technically there. And the problem with that was there were some trades that I was taking which were low probability, and that means obviously they're less likely to play out. But I would risk capital on those setups, and then the other setups that were higher probability that I might have missed because I wasn't looking at that, because I was looking at the other trades, would then play out, and then it would distract you and it'd make you feel FOMO, and you missed out on that, and that would have played out. And so what I did was be patient and wait for high probability setups and only take the high probability setups. So even if there's a trade there that suits my plan, but I know there's some negative aspects to that trade, I'll wait, I'll be patient, and even if it goes off without, I'll either place a smaller amount of capital on that trade knowing that it's lower probability, or I'll just not trade it at all and wait for a high probability setup. And that really helped. Quality over quantity. Not every day is a trading day. Not every day you need to be in the markets. And I know what that's like, where you feel like you have to be in the trade. You wake up, I need to trade today, that's like my job, or that's what I need to do. But actually, the best trade is no trade sometimes, when there's a low probability setup or there's no setups. Just to wait, be patient for the opportunities, to wait to execute your plan. And that's all you can do, really. You can't keep taking trades that aren't there. You can't wait for opportunity. You can't take trades when, like I say, when there's no trades there. You can't take low probability setups all the time and expect to be winning. So you have to be aware of that. And like I say, patience is one of the biggest attributes to success in trading. You need to be able to sit there, be patient, and wait for opportunity, not rush, not over risk or rush to get into the markets. Wait for the opportunities and then execute as you should. So yeah, those were the main things that I fixed. The understanding probabilities, waiting for higher probability setups, understanding the difference between a win and a loss, that losses aren't always bad and wins aren't always good. It's sticking to the plan and the process. So if you guys got value from this video, I'd appreciate you subscribing, liking the video, commenting your thoughts. I'll get back to you. And yeah, like I say, appreciate the support from everyone. I really do appreciate it. And I'll see you guys in the next video. Thanks for watching, guys.